You're listening to the Wired for Impact podcast. So out of those different categories, would staking be the most secure, solid, interest generating technology that you would put your money in, or would it be a different one of these?
Yeah, for me, I think staking is the easiest and the most accessible and stable of those kinds. So, with yield farming and liquidity pools, there are risks involved with those that you don't have with staking. So, like with liquidity pools, for instance, there's something called impermanent loss, which is basically, we talked about putting two assets in and trading between those, and that's how it generates the profit. If one of those assets were to move really volatile compared to the other asset, like XRP USD, if XRP went to the moon and USD stayed the dollar, that would create impermanent loss where you could actually lose tokens overall if there's a big change because of the way it works. So you could come out with, say, a little less XRP than if you had stayed outside of that pool. That's why you get paid for participating in it, to offset that risk. And the goal is to have your rewards offset any potential loss that you get from that impermanent loss in that volatility. And it's kind of the same concept as the markets where, there's the risk in the market with anything where if you buy up here and then you come down and you sell, well, now you're at a loss. But if it comes back up and you didn't sell, then you're okay. And the same thing with the liquidity pools and the assets. So on the other side, staking doesn't have that kind of risk. It's essentially risk free. There's always the risk in terms of bugs in the code and things like that, but that's very rare. But in terms of investment market opportunity, it's the lowest risk where you just put your coins there, they're generating interest, and it's out of sight, out of mind. You don't need to think about it. You don't need to mess with it. Very low maintenance, which is nice.
I see. I got caught up in the I'm forgetting exactly what it was. Was it not USDT, the Tether collapse or whatever. I had staked some money in that, couple $1,000s in that, and I was still pretty green to the whole crypto space. Ended up losing that. What was the vulnerability of that again?
Are you talking about USDT or FTX?
Yeah, USDT.
Okay. So the thing with I'm not actually sure specifically what you're referring to with the collapse, but
there was the collapse of the stable coin itself was very
oh,
volatile.
are you talking about Luna?
Sorry, Luna.
Okay.
Yeah.
Yeah. So that
Yeah,
was the
sorry.
one that actually was supposed to be a stable coin, and then it basically went to zero.
Yes.
So, and I'll talk about USDT as well, because USDT does have controversy around it. But with Luna, it's very technical how it happened, but basically they had some kind of weird loophole in the way that they were backing up the stable coin. So some stable coins have an actual backing behind them. They're supposed to have, like, say, this much US dollars to actually back what they got. Other stable coins are algorithmic stable coins, meaning there's nothing actually backing it. It's just an algorithm keeping it pegged to that price. And Luna, I'm pretty sure, was algorithmic. And there was like the main Luna token, and then there was the stable coin, and there was some loophole that was exploited, I think, by institutions, actually, is what it kind of points to, where there was a large amount bought and then sold in some weird way where it broke the algorithm,
It was
basically. And
essentially like a hostile attack, wasn't it?
yeah. It was a network attack for sure. And I think it was probably from like, I don't want to say groups, but like big, money interests, big financial interests. Yeah.
Yeah. So somebody stole my money. I that made me mad. I mean,
I'm sorry to
thankfully,
hear that.
yeah. Well, what was a little bit scary is there was a lot of people put their entire, retirement savings, because it was, I think at the time, 20% return. And it was like, I can't get this anywhere else. This is fantastic. People lost everything. And, it's funny because I was thinking about putting some more in it, but I'm glad I didn't. So it makes me a little bit nervous. And you kind of have to go through these growing pains. It is a bit of the Wild West, and dipping your toe in and being smart about it to not put so much in at any one time is probably the prudent thing to do. But from your perspective, Coreum does present a very stable staking opportunity.
Yeah, and it is important to note that it's not a stable coin. It is a volatile crypto asset like XRP or any other. So of course, there's always going to be volatility in the market, and you have to be prepared for that. But in terms of stable interest generation, it's my favorite one. It's the easiest, and it's not some random project. That's the thing too, is
Hmm.
some will be like, hey, my friend told me about this project. There's like 20,000 plus cryptos out there. So that's why we're really diligent about in our academy about figuring out not only which ones sound good and sound pretty, but on paper, what's going on? Do they have the backing of other groups that I trust, like Ripple with XRP? They've earned my trust. And so when I see them essentially promoting and funding Coreum, which is actually the same development as the Sologenic project, Solo, I was telling you earlier, that's doing the
Mm-hmm.
tokenization. They're the same team. And so they had already won my trust. And when
Mm-hmm.
they launched that token last year, it was just a clear, like, okay, I trust these people so far. They've done a great job, and everything is aligning both intuitively and on paper logically.
Okay, got it. Makes sense. If somebody wanted to stake with Corium, do they go to directly to the Corium website?
Staking is going to be a little more complicated right now. It's one of the things that we'll walk you through in our academy, but you basically you have to get it on the right kind of wallet and then do it on there. But once you have it there, it's easy to do and easy to keep up. But right now, not to get too technical, but it is a cross chain asset, meaning it can exist on multiple blockchains. Most of the time, when you're buying Corium on like Uphold, it's going to be the XRP side of Coreum, but the staking is actually done on the Cosmos side. So there's a network called Cosmos, which is kind of like Ethereum. They call them the Internet of Blockchains. It's this whole ecosystem called Cosmos. Native token is Atom. So Coreum exists in that ecosystem, and that's where you stake it. On the XRP side, you can't stake it. So one of the things we teach you how to do in the academy is after you buy it, how to bridge it over to basically the right blockchain island that you need it on to actually stake it. And then once it's there, then it just runs itself. You don't have to do anything else.
I see. Makes sense. Thank you for listening to this episode of Wired for Impact. If you're interested in creating and expanding your impact, be sure to visit us online at impactnow.com.